Hey YouTube, welcome to another episode of Ron's Rants. The next topic is stock market corrections. If you look at where the Dow's going, if by the time this video drops, if we haven't crossed 27,000, we're really close to getting there. So the Dow is at all-time highs, and for many people that causes them to become nervous. So they're thinking, well, if it goes up and continues to go up, when is it going to crash? When is the market going to correct? And when and if that happens, what do I do? Here's the thing. If you listen to the financial news, they lead you to believe that stock market crashes or corrections are a very infrequent thing, and that it's something you should be concerned, you should be terribly worried about when they happen. But corrections actually happen a lot more than we realize. Just to get a little bit of definition out of the way, a stock market correction is when the market, we'll take like an index, like the Dow or the S&P 500, when they go down by 10% or more from their all-time high, from their current high. So if you, in the case of say the Dow's at 27,000, if we saw a drop of 2,700 points in the Dow, that would then be entering correction territory. So if you actually do an analysis of the number of times number of corrections we've had from the year 2000, including the 2000 stock market crash, including 2008, up until now, which the time this video is being recorded is October 2018, there's been about 15 corrections. 15 or so corrections, and that includes the two really nasty ones, were the financial crisis of 2008 and the stock market crash of 2015. If you had to guess how long how long it takes the market to recover from each one of those corrections, what would your guess be? If we include the two long ones, if we include the stock market crash, the market bubble crash of the 2000s, and also the crash of 2008, the average time is 151 days. So in other words, from the time the market tanks and reaches its lowest point to the time it recovers and goes on to new heights is 151 days. That's including those two really long ones. And remember, the market crash that began in 2000 went on for a couple of years. So that was a very long one. I think it was over 900 days until the market recovered. But if we were to exclude those, so if we took out the 2000 crash, and we also take out the 516 days or so that are associated with the 2008 financial crisis, the number gets a lot smaller. If you had to guess, you take those two outliers, or you remove those, and you say, how long does the average correction last? What would you guess? We know it's 151 days, or like a little less than half of a year if you include the really big outliers. If we exclude those, what would you think? It turns out that the number comes out to be around 63 to 64 days, or just over 2 months, practically no time at all. And there's been 13 of those from 2000 to now, excluding again those two really big ones. So if you think about it, stock market corrections are a fairly common occurrence. If we do the math, they occur every 1 to 1.5 years, 1.2 years, I think is what the math actually comes out to. So they happen, with a regular amount of frequency. So when they do happen, what should we do? There's a couple things. One, I would recommend that don't listen to the financial media, because they're going to have experts on there that are going to be telling you to do silly things like the market's tanked, you should sell your securities, move into bonds, move into gold. And if you think about it, that's really poor advice, especially when you're talking about something that only is going to be around for 2 months. And on average, the numbers, the data supports that on average about 2 months is what you're going to have to wait for your securities to recover. So even for someone that's in retirement that is drawing down their investment accounts, it's highly unlikely that you're going to pull out the entire amount that you need for the year all at one time. So if you happen to encounter a time period where the market's correcting, wait a couple of months, and for the most part, you're gonna take less of a hit by doing that. But the primary piece of advice I'd tell you is, do not listen to the financial media. Don't panic. I mean, to be completely honest, the best thing you could do is to do absolutely nothing. Just sit on your hands and just wait it out. That's probably the wisest course of action when it comes to a stock market correction. Buffett is famous for saying, when there's nothing to do, the intelligent thing is to do nothing. And during a stock market correction, selling is one of the last things that you'd want to do during that time. It makes absolutely no sense. It's almost, I use the example in some of my articles that whenever the price of bread drops, if the price of bread were going down, if you say you paid $5 for a loaf of bread, and now for whatever reason, market conditions, now a loaf of bread is now $1, you don't run out at home and grab all your bread and say, oh, the price of bread has dropped, I gotta sell it. That makes absolutely no sense, right? You do the opposite. You actually would buy it. So that brings us to the second thing you could do. Actually, probably the third. So the first is don't listen to the news. The second is you could do nothing. And then the third is probably the thing that makes the most sense to do if your psychology allows you to do it. And that is to look for buying opportunities. Again, if we realize that the average correction is only going to last for a little over 2 months, pretty much everything that you may have had an interest in buying goes on sale. Even if you're an indexer, so you buy like the S&P 500 or you have other index funds that you enjoy, or perhaps some individual stocks that you want to purchase, like those, for the most part, all those are going to also go down whenever the market corrects by 10%, in some cases even more. So, again, if you're using the bread analogy, if you really, really like, whatever, potato bread as an example, and the price of potato bread goes on sale, you're not going to say, I'm going to wait for the price of potato bread to come back up before I buy it. You're going to go out and you're going to load up, right? So it's the same thing with stocks and index funds. If your psychology allows you to do that, if you're the kind of person you can see the light at the end of the tunnel whenever the market is melting down, and realize that this is only a temporary thing, you can do very, very well by taking advantage of these opportunities to increase your holdings at discounted rates. Remember, when you are buying an index fund or you're buying a stock, it's not just some poker chip or some ticker symbol. It is ownership in a business. And regardless of what the market is doing, for the most part, the productivity of those businesses hasn't dramatically shifted in the 2 months during a correction. So you're still buying the same business, you're just buying it at a reduced price. The stock market corrections give you the ability to buy dollar bills at 75 cents. So again, if your psychology allows you to do that, you should definitely take advantage of it. So that's my thoughts on the matter. I put together a really comprehensive post talking about stock market corrections and the history of them, and how long they last. Some of the things that I covered in this video, but even in more detail on my blog, ron-henry.com. Feel free to check it out. I'm going to leave a link to the article in the description, and also right around now you should be seeing it pop up here, a link there that will take you to the blog post as well. So please feel free to check it out. Please like, comment, share, subscribe. If you have different thoughts on what you should do during a correction, let me know. During the last correction, like the one we had here in January of 2018, what did you do? What was your take during that time? Did you do nothing? Did you sell? Did you use it as an opportunity to buy more? Let me know in the comments below. Also, again, visit my blog, ron-henry.com, check out that article, and also leave a comment there once you get a chance to look at that article and let me know your thoughts. Thanks so much for watching. I will see you guys in the next video.